Hello, this is Seewing, and today I'm going to talk about the mid-year California housing market update. All right, let's proceed. And by the way, the bonus you're going to get is toward the end of this video. I'm going to share with you four recent sales transactions here in San Francisco Bay area. So stay tuned. You are going to be surprised as to what has transpired in this local market was a small sample size. But I'm going to go over, I'm going to use the California Association of Realtor website, not that one. And right here, just to share with you, as of June 2023, the California Association of Realtors have a very good high level housing market snapshot. So without further ado, let's proceed. And so this what's happening here is year to date, it's a 40% home sales transaction decrease from June of 2022. And with this market, with this number of transactions right here, and worse is the 32.9% year to date decreases in home sales from last year, from this year to date, 2020. And the median sales price in California, the state of California, is 838,000 to 60. And the unsold inventory index, which is similar to supply inventory index, is housing inventory supply in layman's term. 2.2, which is pretty much a historical low supply of inventory. And therein lies the problem you're seeing for the moving forward. Allow me to describe to you for the rest of this video. So sit tight and try to digest what I'm trying to say from a high level. So furthermore, the median days on market is only 15 days. Just goes to show you whenever a house which is coming into the market, and if the house is priced correctly and it is turnkey or fixed up in a good location, given the extremely low supply inventory, and there are still more buyer demand than there are inventories, these kind of homes be smashed up very quickly within 7 days or so, or even less. That's what's going on. Even at an elevated mortgage rate of 7%, even when the home affordability is at a historical 40-year low because of the last few years of skyrocketing home prices and skyrocketing mortgage rates that were as low as 30% at the beginning of 2022, and now and then toward the back end, the second half of 2022, the mortgage rate skyrocketed all the way to 7.3% around October of last year. And you see tremendous decreases in demand of buyers. A lot of people were placed out of the market. And as a result, inventory increased significantly last year. But now, at the beginning of 2023, what we have seen is that the people out there, they're getting back to normal. They are accepting that the mortgage rate will be around 6 to 7% is a new normal, and people are accustomed to this stabilization, if you will, or the mortgage rate of 6 to 7%. Right now, it's at 7%. It's fairly high. Yes, a lot of people are priced out of the market. They're sitting on the sidelines. And however, because the level of inventory is so low, not only in California, but nationwide, that's why we still have more buyers than available resale homes. Okay? So just to give you a very quick update as to what's going on now to my article. So anyway, let me scroll down, and the first market we're going to highlight is in Southern California. And as you can see, these trends are pretty much everywhere in California. For that matter, these trends are everywhere in the nation for the most part. Although there's no such thing as a national real estate market, all real estate is local. In fact, all real estate is hyper local. By the way, wherever you're watching this video from, whether you're in California or somewhere other part of the country, please comment below. Tell me what's going on in your market. Are you seeing a robust market? Are you seeing bidding wars? Tell me in details. Comment below, and I'll be more than happy to respond to those comments. Okay, so I'm very, very curious. That's it. Every local market is very different. But today, I'm just going to talk about the statewide of California from a high level, partly because I live in California for the past 34 years. I live in San Francisco Bay Area, and I bought and sold several primary homes over the past 30 years. So you could say I have a pulse of the market. However, although I'm a California licensed real estate broker, I do not sell local houses here in the Bay Area, anywhere in California. I just refer my times to the local agents throughout California. My specialty, I've been doing it for the past 50 years. I run a real estate investment club here in the area, and I built real estate investors in California and elsewhere in the country to take them to buy remotely, to buy on estate, to buy passively, turnkey, cash flow, low affordability, fastest growing markets in the country, in the South and Southeast, and West, mainly in the Texas and Florida region. Anyway, at the end of the video, please subscribe to my website, put your email in there, so you'll receive weekly email newsletters on practical real estate investing education, so you can become a real estate investor and take action to increase your wealth. Okay, so that said, let's get back to our article. And here we are. So Southern California, again, double digit in decreases in sales. We have lock-in effect. A majority of mortgage holders right now, they already refinance at a historically low rate of 4 to 3%. So they are not selling their home to move up to another home, having to pay 7% new home mortgage, essentially doubling their payments from the existing payment. Because of their resale homes are not selling at all, we're seeing almost no inventory out there, and the demand or still out there greater than supply. Economics 101, right? Many of you learning in the 6th grade. Economics 101 means if demand is greater than supply, it will put upward pressure on home prices, and that's what we have been seeing year to date. We have seen approximately 10% increases in home prices in California year to date, 2023. Just to go show you, we are seeing many bidding wars. We are seeing many multiple offers. How many? Well, depends on the specific area, depending on local market in California and elsewhere, but typically like 3 to 10 offers per house, perhaps, or in terms of our bidding prices, maybe 10 to 20% final sales price above asking. That's what we're seeing. And toward the end of this video, I'm going to show you 4 cases where real transaction was provided to me by my friend, Mr. Tony Bruno, who's a local licensed realtor in the San Francisco Bay Area. He's kind enough to provide me the details of the recent transactions in which he participated. Okay, so stay tuned for that very good, interesting transaction scenarios. All right, so getting back to Southern California, median price currently is around $815,000, very high price, 1% lower median price year to year from last year, and 2.2 monthly inventory. In case you're not aware, a balance healthy market is around 5 to 6 months of inventory. Right now, in Southern California, 2.2 months of supply inventory. Suffice to say that it is a very strong seller's market. Okay, agree? That's what's happening. Right, so getting back to the article and medium days on the market, it's only 17 days. Homes are being sold very quickly, and sales price to list ratio, price ratio is 100%. So this means the final list price and the final sales price are pretty much the same. So nobody's, that's happening. Central Coast, as you can see by this map, Central Coast is right below the Bay Area, right above Los Angeles County, everything else in between, Monterey Peninsula, Santa Barbara, San Obispo, and maybe even Oceanside, I'm not sure. Or within this region, which is very large, the median price of very high, as you can see, which is to some of you could be very surprising. How is the Central Coast, which is not LA and is not the Bay Area, and yet the median price is almost 1 million. Go figure, right? Anyway, the supply inventory is only 2.5%. And medium days of market, 13 days, same 100%. Sales price to lose price ratio. And then let's move up to Central Valley, which mainly consists of Sacramento region and Modesto, maybe Fresno, and a few other smaller cities in this region, including Lake Tahoe, California, perhaps. And the median price is 480,000. And once again, double-digit decreases in year-over-year existing home sales and almost triple-digit decreases in year-to-date existing home sales. And what I'm trying to say is when you see year-to-date home sales, we're talking active listings are decreasing, is trending downward, and new listings are trending downward as well. So the longer this will persist, the sellers have a lock-in effect. They're not going to sell their home at a 3 to 4% mortgage rate and move up to buy a home, a more expensive home, at a 7% mortgage rate. Do the math, right? A new mortgage could be more than double. So no way they're going to move. They are staying in potentially for another 28 years of mortgage. And the level of inventory is only 2.2 months in Central Valley, same the medium days of market, 30 days, and so forth. And finally, my neck of the woods, San Francisco area, in which I lived here for the past 34 years, and I bought and sold 3 primary homes over the span of 34 years. So I have seen up, down volatility, cyclical market called California. It's all about appreciation. Although there's some up and down scenarios, including what's going on these past 12 months with the correction of home prices in the Bay Area, especially. And that, anyway, that was happening. Okay, so now I see a tremendous rebound so far. However, for the second half of the year, not only California, but nationwide, there will be a week. We're moving into the seasonality aspect of home buying, and usually it slows down the second half of the year. So we will see home prices will decrease a little bit, the median prices, that is, because we have already grown year to date already 10% appreciation of home prices so far. So it's very robust market given the challenging housing environment that we are experiencing. And here's the kicker. So in the area, the supply of inventory is even lower than other part of the California so far, to the tune of 1.6 months. We're talking extremely prehistoric low amount of inventory. This is very trendy, very disturbingly. It's going to be worse and worse for the rest of this year, right? What if the rest of this year, if the mortgage rates stay elevated at 7%? What do you think about the 1.6 months supply inventory or the 2.2 months supply of inventory in Southern California. Do you think the supply of inventory could be even lower if the mortgage rate stays at 7% or slightly higher? That's the question I'm going to ask you, the audience. Please comment below. What do you think and about it? Do you feel that the level of inventory can decrease, continue, or you can see more supply of inventory coming into the market? Tell me your thought process. Share with everyone your opinions and comment below, and I'll be more than happy to answer all of those comments to look you to give you my take of it. Okay? Okay, let's proceed. Median days of market, doji days, sell price. See, sell price is 2.9% above asking price. That tells me the bidding war is even more severe here in the area than other part of California because the final sales price is more than the original list price. That tells me the area market is very robust, even though we have seen some housing prices decrease in the second half of 2022. All right, so let's fast forward. Let's go over the sales chart. You'll see from a high level picture what's going on in relationship to prior years. Sales struggle to maintain momentum as the mortgage rates has increased the past 12 months. As you can see, there are very little sales transaction, very low amount compared to the pre-pandemic. As you can see, the only comparable sales transaction we have seen are back in 07 and 08 during the last major housing crash. All right, so we're talking a long time since we have this extreme level of inventory for sale. So sales continue to underperform compared to last year. As you can see, the chart looks the same as you go through the 12-year timeline. Ever since the ending of the housing crash, 2008, back in 2010, all the way from 23, you have seen the chart has really jumped very volatile in the past 3 years during the pandemic, suffice to say. So, very interesting market. Is hard to see what's going on. They're very difficult, very challenging. So that creates a lot of concerns and chaos out there for consumers. So they don't know what to. A lot of them are paralyzed by fear and uncertainty out there. So the area sales goal is down, but it's moving in the right direction. There's a good sign. Okay, Southern California sales goals remain subdued. Just pretty much the same. Central Valley struggle to remain momentum. Same kind of a trending chart, sales transaction wise. And June sales by region, almost half of the sales transaction occur in Southern California, being that SoCal is the very large population base, which is most supplies there. So San Francisco comprised 21% of the total sales in California, and Central Valley 22%. So these three major metros in California takes up a large percentage of home sales relative to the overall region. Okay, and sales at the top end are slowest or slowing the fastest. Of course, when you talk about the luxury homes in California, especially in California, we're talking excess of 2 million. So that's pretty obvious. But the entry-level in California, how much is the entry-level homes in California? You're talking 500 to 749K. Yeah, that will be entry-level in California. Yeah, the entry-level is the most desirable price of homes because more people are able to afford the lower price home. But at the same time, the extreme low inventory is such that there are very few of those homes available. Whenever those lower end homes comes into the market, like I said, they get sold very quickly. All right, so that's pretty much I have for the website analysis. Now I'm going to pivot and share with you to go over several transactions and the local transaction courtesy of Mr. Tony Bruno. Tony Bruno is a local licensed realtor here in Fremont, California, which is in the East Bay. He's covering Fremont and Newark and Union City, although you go out of the region into other part of San Jose and San Francisco. So he covered the Bay Area. But anyway, if you need to buy or sell a home in the area, please look up Mr. Tony Bruno. I've known him for more than 30 years. We used to work out together for a number of years in Fremont when I was living there. Now I live up the street, up the road in Tri-Valley. But he's been a licensed realtor, top 1% country. Been doing it for 35 years. So been there, done that. Very good, high level local realtor. Anyway, so here, this is his listings. So the first listing recently that was kindly enough to allow me to share with the audience. It is property in Fremont. It's listed for 1.69 million and it's sold for 1.825, right? Am I right? I could not show the entire screen here. Just to show you things are being sold way above asking. The second property in Union City, very small home, if you will, probably about 1,200 square foot, probably built in 1950. We have good, nice backyard and all that. But even in this obscure little city, Union City, 50,000 people next to Fremont, this home recently had 12 offers, which the first 5 offers were all cash. And the rest of the offers, among the 12 offers, they have 50% down payment, which is mind-boggling. People still have money in the area. I don't know how they find the money. I have to say that having been living here for a very long time, the salary in the area in California, for that is much higher than the rest of the country, along with that home prices, and they find the money in the down payment, perhaps gifted by the wealthy parents who own a home in the area in California for more than 50 years, whatever. And also they have their own down payment money they saved up because of their high salary, working for Silicon Valley, what have you. And then, of course, there's some still have some stocks and bonds remaining. Some have stock options or vested recently, and they use that as a source for cash purchases or high down payment. So these people will really don't really care about high mortgage rate. So they can bypass that because they have a bunch of cash available. So you can't say that for the majority of the buyers out there, rest of the country, people who like to get loans and their mortgages are extremely unaffordable. That's why we're seeing a 40-year affordability low prices in the nation. A lot of people are being priced out of the current housing market for 2 years. Things are not getting any better moving forward based on current trends. Do you agree or not? Comment below, share your thoughts. Let me show you the list price of this home. Draw run, please. The list price was 1.1 million and the final sales price, probably a cash offer because there were 5 of them available. The final sales price is 1.355. Now you know $254,000 above asking. So do the math. Insane. Newark, right next to Union City, right next to Fremont, a little small city, not so small anymore, maybe 50,000 people. Years ago, I guess I wouldn't call this a good location, but now things have changed. Anyway, gentrification, if you will, many parts of Newark, cookie cutter small homes, neither too bad. This buyer, Tony Bruno, my slang, helped this buyer buy this home 2 years ago for $870,000. And you're thinking at that time, 2019, most likely, you're thinking, wow, this got overpriced, overpaid for this house, overvalued at $870K. Really? Overvalued compared to what? Now, when you have a meeting of the mind between the buyer and the seller, and with the buyer is willing to pay the price based on the market condition, it is what it is. For somebody to say overvalued, overpriced, compared to what? That's what I'm saying. Now, 3 years later, this buyer wished to sell. I don't know the reason why. So important life reason this buyer wished to sell. Guess what's the sales price? The drum roll, please. The sales price is 1.225 million. Now, what are you going to say? Oh, it's overvalued or is overpriced? You can't say that compared to what? If a person's willing to buy this home for 1.225, that person, that buyer, they want this house, they willing to pay this price, they don't care if it's overpriced or not. They intend to live at this home for the long term, and they have money to do so. They have credit, they have means to do so. It is what it is, right? That's what I'm saying. And a final house in Fremont again. This is a very small homes again, older home, but in a distant area in Fremont. And this house is pending. The last offer was here 1.15 million. You could not. I'm so sorry. Couldn't show you the offer, the final offer on this past Tuesday or a few days ago, and the original list price was 899, and the final offering price, pending price, is 1.15. So, a couple of $100,000 above as. So that's what's happening in the Bay Area. That's what's happening in California. I'm sure in many pockets of Southern California or Central Valley, the same kind of situation is occurring. Bidding wars, lack of homes for sale. People have money to buy. People have all cash, all purchases ability. People can pay way more than 20% down payment that could on the mortgage rate or really secondary or high mortgage rate or really secondary to their objective. Well, I can't say that for the rest of the country, but also what's going on in California is very different. I'm not going to agree or disagree. I'm trying to be objective. Anyway, as I leave you, if you see any sort of value in this video, please smash the like button and subscribe to my YouTube channel. I need more subscribers, to be honest with you. As you see. And finally, please visit the website below, drop an email, into the form to subscribe to our weekly turnkey real estate investor newsletter. You can learn a lot and actually buy one of those turnkey cash flow properties out of state somewhere in the fastest growing area in the country, Florida and Texas, to name a few. Or in the Midwest, cash flow 25% down, payment even at an elevated mortgage rate, you can still cash flow. You can still have a long-term buying goal so you can create wealth for yourself and your family generation. Thank you so much for listening. This is Seewing here. I will see you shortly on another update about housing market and real estate investing as well. Thank you so much. Bye-bye.